Welcome back to the channel, and thanks for joining me. I'm Algabot, your guide to the world of automated trading systems for MetaTrader 5. In this video, we're taking a close look at an expert advisor called VWAP Range Breakout. It's a momentum breakout strategy that blends three independent ideas: a volume-weighted average price regime filter, a price channel breakout, and a relative strength index momentum check. By the end, you'll understand exactly how it reads the market when it enters and how it manages every trade. Let's get started. And remember, this is educational information only, not financial advice. So what exactly does this expert advisor do? At its heart, VWAP Range Breakout is designed to catch moments when a market stops drifting sideways and begins to expand with genuine momentum behind it. It works on a single time frame and can be applied to many instruments, from currency pairs to indices and metals, though as always you would study how it behaves on your chosen market first. The strategy is built around three layers of confirmation, and that is really its defining feature. The first layer is the rolling volume-weighted average price, or VWAP, which acts as an institutional fair value anchor. When price is trading above the VWAP, the strategy treats the market as being in a bullish regime, and when price is below it, a bearish regime. The second layer is an in-bar price channel, the highest high and lowest low of the recent bars. A real breakout means price closing beyond that channel, signaling true range expansion rather than noise. The third layer is the relative strength index, which measures momentum and confirms that strength is leaning in the same direction as the breakout. Requiring all three of these to agree is what separates this approach from a simple single-condition breakout system. Many breakout systems struggle with false signals, where price pokes above a recent high and immediately reverses. By demanding regime, range expansion, and momentum together, the strategy aims to filter out a portion of those traps. This style of system tends to suit traders who are interested in trend and momentum behavior, and who are comfortable letting a rules-based engine wait patiently for all conditions to align rather than trading constantly. It is not about being in the market all the time. It is about being selective. Everything we discuss here is for educational purposes only and is not financial advice. And of course, trading always involves risk, including the risk of loss. Let's walk through the exact logic, step by step. The expert advisor works on completed bars, meaning it makes a decision once per finished candle rather than reacting to every tick. On each new bar, it updates its history and calculates three values: the relative strength index, the average true range, and the rolling VWAP over the chosen period. For a long entry, conditions must all be satisfied at once. First, the closing price of the most recent bar must be above the recent channel high, which is the highest high of the look-back bars before it. This is the breakout itself. Second, that close must be above the VWAP, confirming a bullish regime. Third, the relative strength index must be at or above 50 plus the RSI margin. With the default margin of 8, that means a reading of at least 58, showing momentum is leaning bullish. And fourth, the bar must be a strong bullish candle that closes in the upper portion of its own range, near its high. Only when all four agree does the strategy signal a buy. A short entry is the exact mirror image. The close must be below the recent channel low, below the VWAP. The relative strength index must be at or below 50 minus the margin, so 42 or lower by default, and the bar must close weakly near its low. Once a position is open, trade management takes over. The stop loss is placed at a distance of the average true range multiplied by 1.6, and the take profit at the average true range multiplied by 3. Because the take profit distance is wider than the stop, the structure aims for a reward that is larger than the amount risked on each trade. There is also a thoughtful exit rule called the VWAP-flip. If a long trade is open and price closes back below the VWAP, the regime that justified the trade has disappeared, so the strategy closes the position early. The same applies in reverse for shorts. On top of that, the EA holds only one position per magic number at a time, and it waits a cooldown of a few bars between entries so it does not stack trades on top of each other. Together, these rules keep the system disciplined and patient. Now let's look at the actual MQL5 code running inside MetaEditor. At the top, you can see the input parameters, the dials you can adjust. VWAP period sets how many bars feed the rolling VWAP, defaulting to 50. BreakoutLookback, defaulting to 20, defines the channel. RSI period and RSI margin control the momentum filter, while ATR period, AtrSlMult, and AtrTpMult shape the stop loss and take profit distances. Cooldown bars, lots and magic round out the list. Below that is the long signal block. The Boolean long sig is true only when every part lines up. Last close is above channel high. Last close is above VWAP. The RSI is at or above 50 plus the RSI margin. Last close is above last open, so the candle is bullish, and closes upper confirms a strong close near the high. When long sig is true, the code reads the ask price, sets the stop loss at the ask minus AtrSlMult times ATR, sets the take profit at the ask plus AtrTpMult times ATR, and calls trade.buy to place the order. The short block is the mirror image. Short sig is true when last close is below channel low, below VWAP. The RSI is at or below 50 minus the margin. The candle is bearish, and closes lower confirms a strong close near the low. The stop loss sits above entry at the bid plus AtrSlMult times ATR. The take profit below at the bid minus AtrTpMult times ATR, and trade.sell sends the order. Notice how the buy and sell sides are perfectly symmetrical. The same logic, simply flipped. That symmetry is what makes the strategy straightforward to read and reason about. Let's bring it all together on this illustration. On the price chart, you can see a line weaving through the candles. That is our rolling VWAP, the fair value anchor. Below the price, in the lower panel, is the relative strength index, with a dashed line at 58 marking the bullish momentum threshold and another at 42 marking the bearish one. We begin on the left with a cluster of small candles drifting sideways. Price is coiling in a tight range, the highs and lows barely changing. This is the channel forming. The strategy is quietly recording the highest high and lowest low of these recent bars. During this phase, the relative strength index sits in the middle of its panel, neither strong nor weak, so no condition is met and the EA simply waits. Then watch the fifth candle. Price pushes up and closes firmly above the top of that recent range, a genuine breakout above the channel high. At the very same moment, notice three other things click into place. The close is sitting above the VWAP line, confirming a bullish regime. In the panel below, the relative strength index has climbed above the 58 threshold, confirming momentum. And the candle itself is a strong bullish bar, closing right up near its high. All four conditions agree, and the buy entry marker appears. The stop loss is placed a set multiple of the average true range below the entry, while the take profit sits a wider multiple above it. Now follow the next two candles. Price continues to expand upward, each candle building on the last, riding above the VWAP the whole way. Momentum stays firm in the upper part of the panel. By the seventh candle, price reaches the take profit target above, and the long trade is closed for a gain in this illustration. Notice how the reward captured is wider than the distance that was at risk. That is the 3 times and 1.6 times average true range structure at work, aiming for roughly a 2 to 1 reward to risk shape. After that high, the mood shifts. Price stalls and begins to roll over. Watch as a candle closes back below the VWAP line. The bullish regime that justified the long is now gone. This is exactly the situation the VWAP-flip exit is built to handle. A couple of candles later, price breaks beneath the recent channel low. At that same bar, the close is below the VWAP. The relative strength index has dropped beneath the 42 threshold in the lower panel, and the candle closes weakly near its low. The mirror image conditions are all satisfied, and the sell entry marker appears. This time the stop loss sits above the entry, and the take profit sits below it. From there, price slides lower, candle after candle, staying under the VWAP with momentum pinned low in the panel. By the 11th candle, price reaches the downside take profit target, and the short trade is closed in this example. Step back, and you can see the rhythm of the whole system. It waits patiently while the market ranges, then acts only when regime, breakout, momentum, and a strong close all point the same way. First to the upside, then to the downside. Each trade carries a predefined stop and target. The cooldown spaces entries apart, and the VWAP flip stands ready to step in early if the regime turns against an open position. Of course, not every signal works out this neatly, and losses are a normal part of any strategy, which is why this disciplined, rules-based structure matters. And that brings us to the end of our look at VWAP Range Breakout. We walked through how the rolling VWAP defines the market regime, how the N-bar channel breakout confirms genuine range expansion, and how the relative strength index adds a momentum check, all of which must agree before a trade is taken. We also covered the average true range-based stop-loss and take-profit, the VWAP-flip exit, and the cool-down and one-position rules that keep the system patient. Remember, everything here is educational content only, and not financial advice, a recommendation, or a solicitation to trade. If you found this breakdown helpful, please like the video, leave a comment with the strategy you would like me to analyze next, and subscribe for more MetaTrader 5 strategy walkthroughs. You can find out more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.